Wish you could invest without constantly watching the ups and downs of the market? Dollar cost averaging might be the strategy for you. In this video, we'll break down what it is, how it works, the pros and cons, and how to get started. Let's dive in. Dollar cost averaging is a method where you invest a fixed amount of money at regular intervals, regardless of what the market is doing. It's about staying consistent with how you invest, not necessarily what you're investing in. And chances are, you're most likely already doing it. If you have a 401k, then you are dollar cost averaging because you're automatically contributing a set amount of money from your paycheck consistently every month. You can set up dollar cost averaging in one of two ways. You can do it manually by buying shares of stocks, ETFs, or mutual funds on a regular schedule, like every other Thursday. Or, for a more hands-off approach, you can set up recurring investments, also known as automatic investing. This allows you to buy shares of stocks, ETFs, or mutual funds again and again automatically, helping you save a little bit of time and effort. Dollar cost averaging means you're investing consistently, regardless of whether the market or your investments go up or down. There are plenty of benefits to dollar cost averaging, and for that, I'm handing it over to our investment professional, Stephanie.
When you're dollar cost averaging, you're saving and investing regularly. This helps you establish a good investing routine and a strong financial foundation. As you keep investing regularly, your money has the potential to grow exponentially. For example, let's say you put $100 into an S&P 500 index fund every month for 5 years, earning an average 7% return. At the end of those 5 years, you'd have $7,200, which is a pretty decent amount. But what if, instead of taking out that money at 5 years, you kept investing the same amount and let it compound for 10 years? Well, you'd potentially double your money and end up with $17,300. Just keep in mind, dollar cost averaging doesn't assure a profit or protect against loss in declining markets. It also involves continuous investment in securities, so you should consider your financial ability to continue your purchases through periods of low price levels.
Another benefit of dollar cost averaging is that it can help take the emotion out of investing. It's sort of like mentally putting your investments on autopilot. As the market fluctuates, your emotions stay in check and you stick to your plan. You're also not trying to time the market or predict prices, which history shows is practically impossible. Industry experts say time in the market is always better than timing the market. This chart shows how missing just 5 of the best days of the market could result in a 37% drop. And look at 50 days. That's a lot to miss out on. Bottom line, as you can see based on past performance, it's a good idea to stay invested as long as possible. And it's never too late to start. Okay, one last benefit of DCAing, or dollar cost averaging, is that it can help lower the average cost of your investments compared to investing a lump sum of money at a bad moment in the market.
By investing the same amount again and again, you buy fewer shares when the price goes up and more shares when the price goes down, helping you smooth out all the ups and downs of market volatility.
But there are some considerations with DCAing. If you have a lump sum ready to invest and the market moves upward, going the DCA route could mean missing out on some of that growth. Next, there's also more potential to be charged commissions or fees from your brokerage company. That's because you're making transactions on a regular basis. And third, dollar cost averaging is a commitment. But with all this knowledge under your belt, it really doesn't have to be. Recurring investing lets you put investing on autopilot, but keeps you in complete control, so you can make changes at any time. Now, how do you set up recurring investing at Fidelity? It's actually pretty straightforward. They have a great article that'll walk you through the entire process step by step. I'll drop a link to it in the comments below. All right, so that's it for dollar cost averaging. Thanks for watching. If you have questions on what we just talked about, drop them in the comments and our Fidelity team will reach out. Till next time, investors.